Good morning, guys. Happy Monday. It is the 21st November and it is almost reaching New York Open. It's 12:37 here in the UK. Now, today's just not been my day. I tell you, I've recorded the market structure for today, this week, twice already now. First time, there was no volume, so I had to re record the second time. And as I was uploading my second time, I accidentally deleted that video and I could not recover it. So, this is my third attempt, and three times a charm, they say. It is. So, let's just go. So it's let's look at the market structure for this week for a couple of pairs and what to expect and what we can hope the price would do for the week, and then where we could look out for possible entries. Okay, so before I do that, I just want to show you guys a trade that I put in for Asian last night. So basically, when Asian opened, I'm just going to turn on my indicator and I'm going to show you guys where I entered the trade and why I entered the trade. Okay, so I am looking at the 1 hour chart. I'm going to remove my divergence indicator for now. But if you can see on my 1 hour chart, all my EMAs are lined up. By now, you guys already know I follow my moving average strategy. So all my moving averages got to line up. And then I wait for a rejection pin bar basically on the 10, 21, and sometimes the 50. All right, so this is where I got in last night. You can see this pin bar here, bullish pin bar print. All right, it rejected the 10 EMA and it did come back down. So almost. So my stop loss was right below the 20 EMA, 21 EMA. Almost got stopped out, but didn't. Right now, I'm in profit. I have a 1:1.5 ish take profit region, so I'm just waiting for the candles to do whatever it's doing. And for me, earlier when I recorded this videos, which I told you it didn't really work out because of the sound and I accidentally deleted it, the candles were somewhere along the rib. So I did mention in my previous video, if any one of you guys know how to remove this thing, whenever I hover, these things come up and then it kind of blocks like the candles below. So it just makes it a bit annoying. But yeah, if you guys can see the previous red candle here, where this line, can you see that? So here. So I was saying that if it closes below the 10 EMA, I possibly will do a manual exit and come out because that is possibly going down. But it didn't. It did another rejection of the 10 EMA as well. So I'm still in the trade, and once it hits my take profit region, I would exit the trade. So let's just see how this works out, and I will show you guys again. If it works out by the time we finish this video, great. Otherwise, show you guys tomorrow. Anyway, but I think at the close of this candle, if it closes above, I literally would put this in a break even already, to be honest, just because it's been teasing in this region. Right now, I'm a good 30, 32-ish pips in profit already. So this literally would be a risk-free trade. All right. So yeah. Now let's look at the top-down analysis of US30 and then see what we feel the market potentially could be doing. So these are all the markings I did earlier, guys. So I'm not going to erase it just because it makes it easier. So we can see that it's currently an uptrend. So right now the candles are all above the 200 EMA. So it is an uptrend at the moment, but however, the moving averages are not lining up the way I want it to. So it is moving accordingly. So we just have to wait for some rejection to happen. Like, if you see this bullish pin bar, just imagine this all lines up. It's a bullish pin bar. This would have been a good amount of pips. I would not have taken this even though a bullish pin bar printed and it did move the direction of the print, but my moving averages have not lined up the way I want it to line up. So therefore I would not have gone in. And having said that, look at the next candle rejected the 200 moving average. For me, that would be a bit like I would probably get anxiety over it because I would have thought that it's going to go back down. But it didn't. It went up. But it's okay. We are always going to be seeing pips form. We're always going to be making money in the market. There's always a tomorrow. So let's just be patient and wait for our trading rules to set up according to the way we want it to. And that actually boils down to being disciplined and being patient, guys. All right. So yeah. So here we have, I'm going to bring all this up now. So we have a liquidity zone here, And you can see these 2 points are basically very, very crucial, important zones, I would say. And it's just about what price possibly could do. It possibly will go up, come back to retest the zone again, and this will be an entry point basically, and then go all the way up. Or it could do a fake out, right? A better fake out. Like to me, this accounts for yeah, this would account for a fake out because sometimes when you look at liquidity zones and then you look at fake outs, they do not necessarily have to go on top of the zone. Like sometimes they go to this the top of this candle here, and that would constitute a fake out basically, and then it will drop. So basically you could do a full on fake out right now, go up and then come back down. And if it does do that, guys, then what we would expect to do is it goes up and then it comes back down. We would wait for it to go down, right? And then we would wait for it to retest the bottom zone, probably into the zone, and then at that area where it does go into the zone, we can take it back down all the way. Do you guys get me? So it's really now waiting to see what the market doing. Like for me, this is like a consolidation area, to be honest. Um, so if you drop down to the 1 hour, which we already have done, though it's a consolidation, there was a nice entry. So I got in, but we just have to wait and see what it does, right? And if it does close above this candle here, which is the neck, like you see, you can do a breakout strategy as well. So it just depends what these candles are going to do. On the overall, however, on a downtrend, it is on a daily time frame. If you look at it, I'm going to remove all of this just so that, you know what? Hold on. I'm going to do it here. Sorry, guys. I'm going to you can actually see it's a beautiful downtrend and it is at a crucial zone. However, it is still on a downtrend. So possibly price could do go down and form a lower low here as well. So we just have to wait and see what it does. And wait for the structure to break typically. And then we can go in on the entry. All right, so that's my take on US30. Let's look at AUDUSD. So AUDUSD again, look at it. It's very nicely on a downtrend. I'm going to turn on the indicators. Right. Basically, what I did was I actually drew a fib earlier, guys, just so that you guys can see. I'm going to go through it again. So because he was on a downtrend, I'm going to draw this. I drew a fib from the top here and then basically to the bottom of this, and you can see it's done. It touched the golden zone 0.618, and it's rejected it. So do you guys get me? So it's to the top of this area. So I drew from here all the way to the bottom of this candle. And you can see it's touched the golden zone. So therefore, some people like to trade Fibonacci. So you would basically do your entry. I'll do this again for you guys. It's easy. You guys can understand. It will be a short position where you enter at the zero point 0.5, and then your stop loss at the zero point 0.7, and you take your profit down to the zero. So this would be a Fibonacci trading strategy basically. So right now you already are in a slight profit. For me, guys, I use Fib as one of the confluences. It's not a trading rule. So therefore I do not trade Fib. So I would wait patiently for the moving averages to line back up. So possibly around this region, do a rejection. I might take it down here or even further down to wherever I think the market is going to go. So that's a very strict trading rule I have, my moving averages. So I'll tell you guys, for me, my non-negotiables are this: always trade with the trend. So if the trend is oops, if the trend is basically a downtrend, which my 200 moving average is the one that's going to tell you the trend direction. And if it is below, all my candles are below, it is a downtrend. I am not looking for buys whatsoever. So that's the number one rule. Number two rule: all my moving averages got to line up in the correct direction. So if it's a downtrend, it's got to line up this way, like 10, like 200, 50, 21, and 10. And if it's the uptrend, it's the other way around, right? So all my moving averages got to pan out and they got to be lined up properly. And that's my second rule. And my third rule is I need to get a rejection pin bar basically on my 10 or my 20, 21 moving average. Sometimes I do take it when it moves and rejects the 50 as well. But most likely it's the 10 and the 21, guys. So that's my three rules. But FIB is a nice one to use as an additional confluence, just so that you know it's done a rejection there and it possibly can drop all the way down. But again, it might not really continue on a downtrend. It might do a rejection off here and go back right up to the 200, or it might go touch the zero and then either around there do a consolidation and then go back up again. We just have to watch the market to see what it's doing, guys. And again, divergence is a very good indicator that I tend to use as well, just to kind of help spot any reversals and so on. So that's a good one for these are all my additional confluence, let's put it that way. So right now it is on a downtrend. There's a potential trade setup here, but having said that, it's not a trade that I would get myself into at the moment. Let's look at Euro USD. From what I saw earlier, Euro USD is the same thing. Like, I want to show you guys something, and I'm showing you all this on the daily, but if you want more trade ideas, if you drop down, typically I take my trades on the hour and the 15. The reason why I'm doing the daily is just so that we get an idea of what the overall pattern is right now. So this was on a nice downtrend. It's done a reversal right now, a retracement, I would say, and it's way back down again. But look at this, which is very interesting, which that's where a reversal is coming, is going back down. So if you look at this top, it's form a double top on my divergence indicator. Look at where this first top is. It's this candle here, and then you see the second top here. It is this candle here. On the chart, basically, it is an uptrend, right? Look at it. It's from here to here. It's a small uptrend. However, on my indicator, it is this. Do you guys get that? So you can actually see that there is, so double tops, you know what that means. So double top basically means it is going to drop, and that's exactly what it has done. So when you are trading, you just got to be aware of this kind of divergences so that you know that trend is going to reverse, and basically you have a reversal coming, and then you know that it's going to drop. But having said that, guys, it's not even a pattern that I would trade. Like I said, I would wait for my setups to happen the way I want it to, and then I would enter it that way. It just gives me less anxiety, less unsurety of the trade. And I will not have to be like, okay, did I do this right? Did I just gamble on it? Or is it just luck? No, I follow my rules, I follow my strategies, and I go in and I put my take profit, put my stop loss, adjust it a while later, like, if it moves in my direction and I'm already in profit, I am adjusting my stop loss, taking partial profits, and then I am just letting the trade run, or I'm exiting the trade and I'm done for the day. Do you guys get me? So sometimes I just kind of try to take away the anxiety from my trading, just because it can get very, very stressful, especially if you're entering a trade with no confidence. So that's that. Another pair that I looked at earlier was actually USDJPY, which I am actually starting to like a lot, just because I think it kind of follows the trend pattern and everything to the T. And I was showing you guys earlier, but I'm going to do it again because that video obviously did not get uploaded. I was where I was actually saying that if you actually just follow like your strategy to T and do backtests, and it's made money before, you there's literally you will there's no way you will not be making money, right? Look, like, just for example, my own strategy, right? So it's all lined up. Can you see all my moving averages are lined up, right? And just look at that. You've got a bullish pin bar print here. You would have had you would have taken entry here, literally zero drawdown, and you would have caught 362 pips, right? Literally zero, almost zero drawdowns, nothing. Like maybe this candle here, but it's so very little, And then let's look for another entry over here on the 21 EMA, another bullish pin bar. Look at that, no drawdown whatsoever. Like, you would have got an entry about here after the close of the candle. Look at that, guys. That is a 831 pips. Like, do you guys get me? Like, if we learn how to be just patient, I feel like it's so less it's like stressful. Like, this is what I mean by sometimes I would take it off the 50, but with the danger with that is it tends to tether in between the moving averages. Sometimes it kind of takes, it kind of drags out a trade, which it depends, really depends. If I feel like it's on a very beautiful, especially look at the fan, the way it's fanning out. But if it's on a very beautiful moving like trend up, I would have got in, but you need to keep yourself. So you get a bigger stop loss, like I would say, just because your candle is so big. So sometimes I like to go in with these tiny candles because then your stop loss is lesser and so on and so forth. But let's say you got in here, look at the move, guys. Just look at that move. Like, you can't make up this thing. Like, just look at it. So you go in here, and then you've got all this 1,122 pips, 200, no, 1,221 pips basically. You got out here. So this is something that I would have come out already just because this pin bar is formed, and sometimes just take like especially here. Maybe I would have come out here, guys, like because I have a support resistance here. If you can see, can you guys see this? A support resistance line. It came here and it formed a bearish pin bar. I'm out. So sometimes I think being not greedy is actually good. I mean, end of the day, it did go up in the direction that we want it to. But look, if you had just carried this on and you didn't adjust your stop loss, you didn't do any of that, you would got all the way up here. And then if you notice, this basically did a nice dip here. And you would have gone back up in your direction, sure. But look at it, you have another entry here anyway. So I would have just come out, left this consolidation zone alone, wait for the next bullish pin bar to form, and then I would have gone in. Look at this pips I would have taken if I had gone in here again, zero drawdown, and all the way up to this bit here. That's 714. So just by catching the right entry points and the right moves, you literally can have made so much money just by being patient. You literally can't make this up. That's what I'm trying to say. You really can't make this up. And it's another thing I want to show you guys, which is useful in terms of using the divergence. The same trade. Like, look at this bit here. Do you guys see this pin bar? Where I told you guys that I would have already been out earlier here. So if you had still stuck on the trade and you went up here, for example, this is the top, right? This top here. It almost forms like a double top here. Look at that. It came down a little bit. It retested. It did go higher up here, and so on and so forth. But then you look at it goes up here to this candle, this blue candle here. You can see a double top being formed, and you can see it did a trend reversal. It did literally a retracement back down all the way. So this is where you want to come out already, because at the end. But the thing about this whole thing, guys, is the truth is you would not have seen this double top really form until the next candle close anyway. But having said that, let's say you still kept going and this red candle formed. It's still a rejection. It didn't close below the EMAs. But the thing is, this double top would already be formed. If it was me, I would basically just come out already. Even though you have a bullish pin bar print here, it's actually reversing back down just because I would have seen this. For me, this would be an indicator to come out. So it did go down. So right now what I'm waiting for USDJPY is it's done its reversal, its retracement. I mean, it's hit the zero point 0.7 zone. And so therefore I'm waiting for it to go up, let my moving averages line up again, wait for my rejection pin bars like that, and I'm gonna ride it back up again. So let's just see what it does. It could possibly reject here, come back down again. We don't know. But instead of assuming, let's just see what it does, and then let the market tell us what it wants us to do, right? I think that's the best thing to do. Just gonna look back at my trades. So I show you guys where I am with the trade. I'm still very much in positive, and it's still going up. So I'm just gonna let it ride. I've got a 1:1.53. Yeah, 1:1.53 risk to reward ratio. Gonna let it ride up. Possibly will hit my profit target, hopefully, and I'm out of the trade. So that's just that. You see, even if we had lost this trade, guys, the thing is, you can't really feel bad about it just because it kind of aligned with the trading rules. That's what I'm saying. At the end of the day, right now, I'm already at break even. All right, so this is a no loss trade anyway because it's gone up in your direction. Sometimes, if you're so unsure, like you've got 4 more minutes to the candle to close, and if you're really unsure, this is a good amount of pips dependingly on your lot size. But whatever amount the money gives you, the market gives you, look at it, it's got a good 42 pips. You can literally take that, be happy, and exit the trade anyway if you feel like you don't want to wait for it to move and you don't want to wait anymore. If you guys know what I mean, or just adjust it to stop loss and just take it as this trade never existed and let it just do its thing. Sometimes it's just um, being so confident that you've stuck to your rules, and so therefore it lessens your anxiety, guys. That's for me. That's what I think it is. And the only thing for me was that this is a consolidation zone. So during consolidations, how you literally trade it is basically at the bottom and then you ride it to the top, the top, and then you ride it to the bottom like that. Do you guys get me? Like to the top, you ride it to the bottom, and then at the bottom, you ride it to the top. That's how you really trade consolidation, like, just trade it in between, which I don't really like to do. The only reason I went in was because it aligned with my entire trading rules, and I really believed that it was going to go up to this liquidity zone anyway to create the market structure, whether it is going to break up and go upwards or whether it's going to go back down just because of the liquidity zone that we drew earlier in the space here. You know, so this is where I thought it is going to be going up. Let's just see what the market tells us. I'll leave this as it is. So tomorrow when we jump on back again, you guys can actually see how this trade panned out. But like I said, this is a risk-free trade for me right now just because I've already adjusted my stop loss. But let's just wait and see how this trade pans out. And until tomorrow, happy trading, guys.